Hello guys, glad to have you on board again today. Not a lot of big changes regarding the cryptocurrency sector, which means we're gonna flush this one in just a few seconds. We're still in the range, cannot manage to break up, cannot manage to break down. As long as we remain in between those two boundaries, there's nothing else to talk about. It's just dead, and the more you're gonna think it in a volatile way, in a tension rising kind of way, you're just going to be wrong. We're back below the 20-day averaging, which means we have no volume and we remain between two boundaries, which means if you think it the old way, the old-fashioned way, the only one you've basically known, which is hard volatility, a market that cannot stand in a defined range in price area for a long time, if you're always thinking that way, you're just going to be wrong. So thinking the way it is, I always told you that at some point volatility would just flush out and disappear, and this might be what we're about to do. For some reasons, as I said, we could still have a downward volatile move, very sudden, brutal, but it really is going to need a catalyst. We've got multiple possible catalysts, as you can see. For the tether, we could very fucking well just explode in a few days. It's just we got lots of dangers. Okay, it doesn't necessarily mean those dangers will pull out and play out. So if they are, and if the market is following them, then for some reasons I think we can have another drowning on that market. But you shouldn't consider that a necessity, and it's not necessarily going to happen. So don't forecast this to be obviously to come, because if you're taking short entries right now, you're basically once again short in a damn fucking support area that hasn't broken yet. Every time we've been trying to do it regarding Bitcoins, it always ended up pretty for those who've been trying to short the supports. So doesn't necessarily mean we're going to rebalance one more time, because it's basically people feels like they're binary choosing right now. It's either it's going to be bearish, either it's going to be bullish, and what if it's none? Just ask yourself that question and give me an answer. What if it's none of those two choices? What if we just do nothing in here and die there for a few months, for at least a few weeks? I want at least 2 or 3 additional weeks. 2 weeks would be the minimum in there, and I really want to see the momentum in the intraday basis really contracting the way it is. I mean, making candles like that, oscillating 1 to 2% in a day-to-day basis, and no more than that. If we do that, just like we've been doing back in 2014, so we're going to take the Bitcoin, not in an index. I'm going to take Bitcoin USD from Bitstamp just to get enough history. I'm going to get back to 2014. Okay. And this is what we had back then. Remember the video I've been making back then about that crash, when I said, okay, this is the moment where I think volatility is crashed down enough to consider the price is dead and the crash is probably over. Whenever we had this, look at the volatility, the intraday volatility. This is what I expect. I mean, at the current time, we could just be there, which means an additional at least 2 weeks, minimum 2 weeks, to just forecast the price to be buyable. That necessarily means the price will make the final dip. It's just that at that point, buying long-term is not risk-free, but less risky than buying blindly at those possible stages. We could still just be there, and at that point we'll have another drop. So you just really don't know. Or we could just be there, narrowing the price ranges below support, above support, to just fuck it up in a couple of days. So you don't really want to make things a necessity. Don't think it that way. Everything is fucking possible out there. So wait and see. You just don't know if we're there or there or there or there. The only way you can know that we are at least there, and this is all we care about, assessing the maturity of that breakdown pattern, which is the crashing pattern. We just want to make sure the maturity has been moving on enough to just be able to be into the long-term buying scenario phase. I think we might be reaching that phase, at least for Ethereums and things like that. I'm not necessarily sure about that regarding Bitcoins. This is the only reason why I'm still waiting, and nothing has changed so far. So not necessarily going to need to talk more about this. You already know about that, but I thought it was necessary to repeat that once again. If you have some vacations to take, just take them. There's no rush. It's either we're going to do nothing for an additional 2 to 3 weeks, or we're just eventually going to break down. And if we do, then you just have to put a damn fucking alert and move away from your screens. Enjoy the real life, enjoy your friends and families, go to the beach, whatever you're doing. It's just going to be better than just sticking in front of the computer. So moving on, the other asset classes. So today I'm going to sum up the informations I've been saying to the French users. So the US stock market is still pretty damn volatile and lost out there. It's just, as I said, the fucking dead zombie is at play. We've had a bearish down day, so we're probably going to try to invalidate this today, or at least retesting yesterday's resistances. This is what we're already doing. Doesn't necessarily mean that this is going to be a success. Regarding the Nasdaq, we very well have to break this up. We can go to 7,445 because we've been lefting a few volume in there yesterday. As you can see, tiny volume in here, which is a possible selling area today. If we overcome that level, just don't go into selling again. Just let the bulls do the job and let them take the price to higher levels, chase the stop losses and things like that. I'm already ready to get stopped out regarding that asset. I really think that today we're expecting to just go there and grinding always slightly higher. So it's kind of, this is what I expect the price to do. Just go there, taking an additional set of stop loss higher than this high. And it's just this way. I mean, I'm having my my stop losses in there on Nasdaq, and I pretty damn expect the market to just take them down. The market doesn't want to go low. It's just make it that simple. All the signals are blue in the 15-minute chart time frame, and everyone is thinking really short term, which means nobody is thinking about the market can be dropping or whatever. It's just the market can never drop, so we're just going to buy it no matter how, no matter what. So there is no reasons out there. It's nothing close to a rational market, but who gives a shit? Everyone is thinking the same, and whenever that's the case, you just don't want to fight it. You're just going to wait for the tipping point to just show up. I don't want to be a buyer. I clearly don't want, because I see the bearish risk, and I know the market at some point is going to price this one. It's just I don't know when, and I don't want to be a player of timing. So I just remain in there as long as I can be there. Whenever I will be pulled out, I'll be waiting to have another opportunity to get in, but that's basically the way I see US equities right now. I'm not trying to rationalize things. Things aren't rational. Things are just stupid, and they will stay that way for an additional few days, I think. Probably heading into getting the volume back in September and trying to figure out if that volume is going to sell or buy below resistances. So we're going to see about that. It's really a binary choice, but the choice might not be taken right now. Might just be dying a few more days heading into September, probably trying to make historical highs to just start September up on those historical highs, and then Wall Street will have to choose if they want to buy the historical highs or sell them and reverse to a bearish movement and get down to the major supports on the SPX. Really, as I said, I don't know. The VIX is back to absolutely abnormal level. We're back at 12. I mean, it's like there's no problems on Earth. Everything's good. Earnings are the best ever. They're not. They're good, yes, but they're not the best ever, and we already know that we're going to have a negative return out of a year-to-year basis on a Q4. So heading into Q4, we know that things will look uglier than they are right now, but we're still pricing things higher forever, like the equity curve is going to be positive forever. It's not going to be the case. We already know that Q4 is going to be the switching level, so all those who think that we're going to have a pretty decent end of year are probably wrong, because Q4 results are obviously going to be game changers, and the market has a necessity to anticipate things, which means we might be pricing this right from Q3, which means we're going to have a volatile end of year, probably. At least that's the scenario I'm still trying to trade. Junk bonds have been trying to break the resistances. So it's just basically waiting right now to see if it fits or not. We cannot hold the candle closers, which means we could very well have a damn brutal reversal at that point and get to really risky scenarios again. But for now, the market doesn't want to price risk. So it's basically, we don't know what's going to be at play. We all know that we're trading very interesting levels without a lot of volume, and that is what concerns me. The fact that we have low volume, which means this is just what the retail traders will do, that will make the decision. So the decision is nothing close to rational. It's just going to be retails are buying, we're selling. Retails are selling, we're buying. And that is the most stupid choice to make when we're trading damn fucking historical highs. This is not the way we should approach those prices, by just negative return out of what the retail traders will do and just do some opposite trading isn't what we should do right now. We're really playing with long-term scenarios out there. We should have long-term volume, and as I said yesterday, the problem is that we do have that volume, and this is what concerns me the most. The fact that this is not normal for a summer, we shouldn't have had that volume, that big of a volume executed, which means we don't have just retail traders regarding the biggest equity index in the world, which is the SPX, and this is really a big concern. So moving on from this, going to commodities. So this is the scenario I've been sharing with you guys. We're right into the expected selling area. I've got nothing close to a selling signal showing up. So we're still in a bullish cycle. So we basically have to wait for the market to oscillate again, find some cycles, and so probably going to wait for additional extended higher prices and probably even that area to get into selling the US oil again. So right now it's basically waiting. That is the only rational choice. So all I have to say is just wait an additional time, wait a little bit to get interesting prices. For now, it's just don't do anything is the most rational choice. So we've been trying to break up that trend channel, obviously, because this is what we're doing right now. We're just trying to break things and make things look as stupid as possible as we're trying to find liquidity. So we're just going to wait an additional time to get into interesting price area, waiting to have a signal, waiting to have an excessive price above that signal, and probably is going to lead us there. And this is the price I'd like to get to trade. So for now it's a wait-and-see approach in here, but I'm going to put an alert down the support as well. So if we're going to break down supports, I want to be on the play. Just as a moment, I know the market is stupid, so I'm going to just let him do some stupid things, and I want to sell the stupid prices instead of just selling the signal and getting chased by stupid prices. Okay, as I said, I'm just going to switch my scenarios to lower risk levels for the next few days until heading into September, which I think the big volume should be back at play. But right now it's basically the mood I'm into. Instead of trading the signals I would have trade eyes closed the rest of the year, I'm now switching to summer mode for the next 2 weeks at best. And anytime I'll see a signal, I'll just eventually take 50% of the expected leverage I will take and keep 50% of that leverage off to eventually short at better prices, and I will double the stop loss sizing whenever I do trade the signal itself, or I just wait for a market excess above that signal and take a higher pricing for a better risk management. Euro dollar is a big game in here. Nothing close to be bought out there. We've got a double signal, but it's an oscillator signal and nothing I'd like to buy. Even though I know those trends are really stupid, and this can just be a sub wave 4 in which we could have another additional bullish wave 5. I don't want to be a buyer of this. All I want is for this to build some kind of pullback. I've been using this, but I'm not quite sure this is going to be the case. But all I need is to eventually find a signal in there. That's all I'm seeking for, and I want this to be upon the previous supports level. So it's going to be either there. Okay, these are the supports I want the market to test again. Make sure that we're holding one, because we've been breaking them one by one, just like they were nothing, and like a knife in butter. So this is all the supports I want to see the market testing again, not the one we've been leaving behind. I want to see the ones that have been tested pretty damn fast in here, and see how the volume will react to those. Once again, so I basically in a wait and see. For now, I have high level of confidence for this one, and this is the one I would like to see the market pricings. So just once again, this is the theoretical price we should find support into. You know, the market is stupid, so probably going to take lower prices and try to break this down. So basically, way to get there. This is the support. Trying to buy in here, probably going to have to buy it a little bit lower if you want to absolutely buy the best price. GBP USD remain heavily bullish on this one. I don't think this is ready enough to be bought. Still waiting for a momentum price. We had a double signal in here, and obviously the market went lower, but this wasn't a technical price. So I think in here we don't have a double signal. We've got the blue triangle, but we don't have anything close to momentum confirmation. So I expect the market to go to that lower level, and obviously this channel isn't working fine. We've got no signals in there, which means I don't want to be buying this. It's either we break up the resistance or we go to lower prices area. So this is not working. I've been putting in a little down there just to make sure we retest our price in time. What the fuck? So this is how I see things. Just like in the euro dollar, I think we've got a big support out in here, and I want to see the market testing it again to just see how it plays out. I think right now we're kind of in a range mode, so it really needs to be bought low, at least below those prices. And this is where you want to buy, and of course the lower the better. It's just we have to figure out what the lows really are, and the problem is that we could eventually keep on going to the downside with that trend, and this could just be a wave one. Okay, 1 2 3 4 5, 1 2 1 2 3 4 5, 1 2 1 2 3 4 5. So it could be a lower price for the GBP USD. So don't be too aggressively bullish right now. Don't buy if you don't have any signal in here, and if you do buy in there, it really needs to be with a stop loss below this price. And the best case scenario in here will be to just be a little bit more patient, because the GBP USD could very well go fuck up that breakout area, because there will be a lot of stop losses in here. And just once again, think market making. The market maker may have some taking profits out there and stop losses out there. It could very well just push you there just to fuck you up. So don't be too damn aggressive regarding GBP. Can eventually have much better prices, and if the market is going there and triggering stop losses, you can be sure I'll be damn fucking buying in here with fucking huge leverage. No problem, no huge leverage. I'll never do this, but I'll have strong confidence that the market will be able to reverse for a long run, a long-term run. Once again, if you have a look at the bigger picture, what's applied right here, GBP USD is a damn fucking bullish asset, which means this is gold prices we're having in here. It really is pretty damn decent long-term pricings, and anytime we could go there, these are prices I definitely want to have. I mean, I remember when we were back then, I took some vacations, and when I went back, when we were back then, I had my baby boy born, which means I was waiting for the bullish signal in that area, and I just got to have my baby boy whenever those damn bullish signals were triggered. And I said, damn it, I cannot enter that trend again, because I've been losing, I'm away from the speculative timing, and I'm not going to run after the prices. And I had to see all of this happening as I was forecasting that shit. I knew that was my scenario to go out there. So all of this, I should have taken damn great gains out of this, and I took zero revenue out of this. So I damn want to have the C wave. It's not a revenge, it's just that, I mean, I'm pretty damn happy to have a baby boy. Much happier than taking a gain. But the thing is that, now that the baby boy is out, there's not another one on the way, and I want to take my damn scenario. To validate, can be there. All I know is that at some point I want to have the bullish GBP move, and I think we've been pulled back in deep enough to get to those prices I should have bought back them again. So I think now having them offered to me once again, I'm not gonna miss the second shot. You can be sure I'm buying and holding in here regarding GBP currencies. So AUDNZD as well, I have to talk about this one. Sorry, I've been reinforcing EURJPY as well. All right, so I'm just going to be straightforward with you guys. I'm going to show you the signals. So this is 2-hour chart. we've got exit. I think now is more than enough time to just go bearish. Look at the trade line, 44. It's just damn fucking stupid out there. We could just go slightly higher. I really don't care. All I know is that right now I have interesting prices. We could just go a little bit higher. I really don't give a shit. I'm just ready to jump in right now. No questions asked. I'm in. I'm leveraged 4, straightforward, so I've been putting all the money back into play. I'm maximum leverage on EURJPY, and I'm going to go further than that. I might be taking additional reinforcement on the downside just to make some breakout trades, so it's a short-term entry, taking profits, just to follow the trend, but that's all it is. I mean, in terms of speculative leverage, I'm maximum exposure right now. USD CNH, same thing in here, I've been shorting. I'm not quite sure if this is the actual right timing. I think the market once again is just chasing people to trade. So I'm very low leveraged in here, ready for an upburst. And I'm waiting for those prices to get into shorting again. But right now, I think there's an opportunity and I wanted to be in because I had no money in there. I want to have some money again. Same thing goes for USD MXN. I'm waiting in here. Sorry, I haven't been trading this one. I'm waiting to have higher prices. AUDNZD, as I said, I don't want to get out. Worse than that, I've just been taking additional reinforcements right now. Don't know what this market is doing, but all I know is that any pullback in that damn fucking blue area is something I want to buy. Eyes closed, no questions asked. I'm ready to put some reinforcements out there, but I'm just waiting now for a price confirmation. But I think this is an excessive retracement level. We should never have gone there. Now that we are here because of a market catalyst, it's just because of that damn prime minister thing that has been playing with the AUD. It's been making that move. We're invalidating it. Now we want to see the market reversing and taking gains again. We can go slightly lower or make some sideways action, waiting for those trend lines to just push up back in. But normally, if we have to... If you think it the way I think it, normally that trend is supposed to accelerate, which means we're supposed to first give the trend, this is the speculators move. Speculators putting some more money in, exactly what I've been doing, and now it's the time where the trend traders should start to get in and buying the pullbacks. So we should have people supporting the price anytime we make a pullback, and we should have some sensibility that the trend is moving on and accelerating. So you can see first move, long consolidation, second move, deep consolidation but faster consolidation, and I want to see another upward move. See 1, 2, 3, 4, 5, pull backing and moving. You see, I want to see the parabol in here. This is the way I should see it. More people getting slowly into that trend and slowly showing signs of increasing bullish demand. Okay, this is what I want to see. That trend is supposed to build up that way. So first it's slow and then it gets to accelerate. So this is why I would like to see a support building out there. And if that's the case, then the price should just rise. You see, rise but pull back, rise but pull back, rise, and fucking exhaust and move in here to just get to the target. Okay. So what else do I have to talk about? Tesla. I'm waiting for Tesla today. I want Tesla at that price, $332. I'm taking a short entry out there, just fill the gap and get into making short entries. Got another gap higher, but I think this one is pretty damn out of reachable areas. So I'm just basically trading the dumb area, selling the highs, taking profit on the lows. I've already done that, meaning I've already took my profits on the lows. I'm just selling back in the highs. This time I want us to exit this, get into the blue area, so the trade is selling, taking profits, partial profits, or probably entire profits from the reinforcements. I'll still keep the big short I have in here. I'll keep this one for a long time. But basically, I'm going to reinforce, take the damn profit, waiting for eventually a pullback once again into the damn area, and selling again to trigger lower valuations and new breakouts. So it's just basically a sideways action that's going to be a play, but a bearish sideways action. Apple's just trying to go in higher and higher forever, so I'm just gonna let that shit go as high as it can, and the moment it will burst, I'll be there to take the damn money. But for now, we're not pulling back to breakout areas, which means there's nothing to trade. Just letting that thing go higher and higher, printing stupid prices, and whenever we'll stop printing those stupid prices, the thing will just collapse. Regarding NVIDIA, I've been stopping the ongoing scenario. We're back at historical highs. The market has been wrong footing the bears in here. As I said, I kind of felt it when we were there. I said, damn it, we're not gapping below the support, and that's not a good price. That's not a good sign. We should have gone to validation level. We aren't. Worse than that, we're trying to bullish breakout and wrong footing the bear signal in here, which means bulls are really still in control, and I don't want to fight that. It's a matter of timing, and as I said, this one is a dangerous one. Could very well be just ranging before bursting. So if it bursts, you don't want to be a short seller of that price and of that asset. So as I said, cautiously trading in here. We had a timing, we had an opportunity. The market isn't taking it, so just surrender the gains. Surrender the losses. Tiny loss, tiny speculated loss. Don't have regrets. It was worth a shot. I won't hesitate. I wouldn't hesitate to do it if it was showing this again. Once I've been shorting in here, I've been shorting in there and shorting in there, and I have no damn regrets. It's the fact that I've been trying twice, three times. You can be sure I'll be trying a fourth one. It's just now I'm going to wait for an additional timing and probably a new context, because if we have to break higher, this time we'll be in final stages of a bubble, and which means the scenario will be different. This time I'll be searching for a market top kind of crash, nothing close to a rounding top structure that is triggering consolidation in two waves. So if we go high, we're going to make a crashing pattern afterwards, which means 3 bearish impulses and a deeper and longer pullback. Okay. Boeing as well is the last one we're going to have to talk about. There is a risk out there, same thing, either we're going to have a damn bubble. So if you can see this, if you see it that way, Tesla no longer going to be a bubble, or we have to be playing a magic thing like Apple buying Tesla. That's the thing that people are talking about right now. I mean, what if Apple was about to buy Tesla and make automatic cars for Apple? I mean, fuck it. Yes, it can happen, and who cares? I mean, if it happens, yes, I'll take a loss on Tesla, whatever. Is it that big of a deal? I mean, it's like everyone is trying to forecast what's about to happen to make big bets and make huge amounts of money and things like that. I mean, didn't you really got the damn fucking point yesterday? When you see this, it's just people agitating kind of bills in front of a big jackpot that is flashing out there. Don't give a damn shit about the jackpots. It's to attract dumb money. If you want to make money in the markets, don't trade dumb. This is how you're going to lose money and not the opposite. So you don't give a damn shit about the jackpots. The information that gets to you are information that people have already priced in, already make the damn choices about. So those who are trading news have insider news, which means they have the news before you do, which means they'll take the money out of dumb choices you'll make out of the news. So don't take the damn fucking jackpot for granted. This is nothing you want to trade. If you want to make money, do the damn smart choices instead. Okay, so buying Apple for Tesla or things like that is just a damn bullshit that Wall Street is trying to sell right now. So don't get into this. And even if it happens and if it makes short-term profits, you don't want to be among the short-term profiters. What you want to be among of is the long-term buyers and gainers. Not buyers, the long-term gainers. Those who will make profit in the long run. Sustainable income is what we're doing right here. Nothing close to making short-term bets. And risky bets in which you want to make a big win and making multiple loss all the way on the other time. Okay, we're taking a speculative statistical advantage out there. This is all we're doing. So Boeing, if I'm wrong again, no problem on this one. But if we are getting out from the bottom in here and breaking major support, like in here, we've got the validation level. If we go there on Boeing, you can be sure I'll be doubling down on that position. It's just right now I'm speculative shorting that price. I'm ready to be wrong-footed in here once again because Wall Street really wants to trigger those bubbles, and as you figured it out, Tesla is not going to be one of those. Apple could really well be one. It's already been started, to be clear. NVIDIA could very well be a bubbly asset, and we will have Boeing, and it's more than enough. We don't need more than that. I mean, all those things will just be losing it entirely in the next economic cycle. We shouldn't invest into Tesla, shouldn't invest into Apple, shouldn't invest, at Tesla we don't give a shit. It's just we shouldn't invest in Apple. They're going to be the big losers of the next economic cycle. So pricing them the higher as possible, yes, okay, if you do. But if you buy and holding, you're probably going to never ever show those prices again. I mean, really never ever. Apple will never get to those prices again. So Apple, definitely not what you want to buy. Nvidia, definitely not as well, simply because they have more competitors and will have. So I don't think Nvidia is going to be something that you want to buy in the next economic cycle. It's got too much margins, which means Intel are going to get into the game, and other Chinese competitors will get there. So it's not something. The chip making right now, Nvidia is set to be the leader. It's not going to be the leader, probably the leader, but not of a leadership sector. Amazon, definitely something I want to buy instead. I mean, as you can see, the market is not buying Amazon right now, and we've got Boeing. Okay, so Boeing is a definite candidate for a pretty damn bullish move. Once again, Boeing's not going to be a big winner. They've been pricing in too crazy high, and I mean, flying sector is not going to be a leader as well. It's been the leader of expansion during that economic cycle, which is the best they can hope for is to make electric planes or whatever they've been reaching maximum rentability, which means now everyone is taking planes instead of driving cars or taking trains and things like that. So we have maximum capacity out there. We just can't do more. All we can do now is just getting into less polluting and more profitable plane tickets, or more profitable plane revenues by just removing some fossil fuels or things like that. If we get to electric, if we have an energy breakdown, that will be the only solution for that market to just make additional profits. But this is highly speculative, and once again, as you can see, the prices we're having right now, definitely not going to price those for 10 years at least. And as well, General Electric oversold is probably going to be one of the big gainers on the next economic cycle. But once again, Wall Street's doing this the exact opposite way. What will be profitable in the future is oversold. What is going to be losing in the long run is overbought. So it's really doing the opposite of what a smart choice will be. And Amazon, we could have it in a bubble, but the problem is, as this one is going to be a big gainer in the next economic cycle, Wall Street's probably not going to buy this one. So, as you figured it out, the more rational choices you'll make right now, Wall Street's just going to do the opposite. It's really a short-term call, so it's not going to last long. It's just waiting for the damn reversing to occur. Let them do the shit. As long as they want to do it, the further they go, the deeper will be the pullback afterwards and the reversal. So just wait for this. Be patient. It's all I have to say. But you already know about that. So right now, waiting is my option, and that's all I have to say. No more than that. And I'm going to leave you guys on that. It's just going to take the questions and wish you a great weekend. So we're going to take, yes, the educational content I've been putting out yesterday. Say what percent of your deposit on forex and what on crypto margin, and that person you bought Ethereum. Okay, I just already said that multiple times. What percentage of your deposit on forex? I don't necessarily know. I'm using leverage in forex, which means I don't necessarily need to have big deposits. I've got professional accounts and I'm trading CFDs, which means I've got a leverage of 1 to 200 available with the broker, which means I can basically trade how much I want. I'm not using that big of a leverage. Once again, I have possibility to go to 200 in terms of leverage, and generally not using more than 4 to 5, going to up to 7 into AUDNZD, 7 or 8, but that's the maximum I'll ever get to. So now, what on crypto margin? I'm not doing margin trading on cryptocurrencies. I've been doing it when I've been shorting via CFD contracts. But once again, I have access to leverage with the broker, but I'm not using leverage. I've always been using negative lower leverage. I've been trading leverage 0.1 to 0.3 to 4 maximum. So I've never been into leverage trading or margin trading into cryptocurrency, simply because that market is damn fucking volatile. So the more volatile the market, the lower the leverages you're using. So I've been using leverages below 1. So I've been reducing amplitude, and now right now the percentage of real capital I've been putting into cryptocurrencies, I've gone public with this. I expect to put $15,000 out there, probably 5,000 Ethereum, 10,000 Bitcoins, and eventually taking a little bit of the 10,000s from Bitcoins to go into eventually to altcoins like Ripple and IOTA. But for now, I'm still forecasting to do just the first two in the first time, and eventually see later. Yes, I know. There's a serious lack of educational content in the U.S. Language or in English language. So I would love to do some more. Yes, we're gonna do it in the future. That's a plan. It's just that anyway, at some point I'll just be done with what I have to teach you guys out there. I mean, the educational content will just be cleared. All the things I wanted to share with you will be shared, which means it's probably gonna happen Q1 2018. And whenever I'll be done dealing with the French users' educational content, I'll get into getting back on what has been lacking out there for the English users, which make right now you're late in terms of against the French user. But I'm gonna cut the slack out of here, and whenever I'll be done for the French users, I'll catch up on with you. So you can be sure you'll have the exact same amount of educational content in the end. It's just that in between might be a slight difference between French and English, but obviously I'm going to catch up on this. You can be sure about that. So anyway, I wish you guys a great weekend, and I'll see you next week.